actually surprised that gold didn't sell off more than it did. It was down about $70 on the day, but it was already down about $40 or $50 before the press conference. So it wasn't that big a sell-off. And, gold was at 34.30 yesterday. In fact, GLD yesterday closed, I think, 2 or 3 cents below its record high close from a couple of weeks ago. So for all intent and purpose, it was at a record high yesterday. And, so it didn't really come down that much, given how hawkish I believe the Fed was. And the dollar rallied, but, it wasn't that big a rally, given this. So I don't know if it really shows how weak the dollar is and how strong gold is that, both markets shrugged off this hawkish Fed, or maybe the markets, haven't really connected the dots. Federal Reserve left interest rates unchanged. The Fed funds target remains between 4.25 and 4.5%. I think this was one of the most hawkish press conferences that I've seen Powell participate in. You wouldn't really know that by the reaction in the stock market. The stock market kind of, just ignored what Powell said. The bond market did get a boost, as you would expect. The dollar got a boost and gold sold off a bit. So those reactions make sense from a hawkish Fed. But you would have, expected the stock market to sell off. And I think the reason it didn't is because I think a lot of investors are hopeful that there's going to be some positive news coming out of Switzerland over the weekend, where the U.S. and China are supposedly going to be having some trade talks. The market got a quick boost from that when it was announced yesterday in the after-hour session, and has kind of held on to that rally. But I think that leaves the market poised for a disappointment when nothing really happens as a result of these impromptu talks with China. And I think there could be a delayed reaction to this press conference. I'm going to get into that in a minute. Interestingly enough, President Trump didn't say anything. He didn't immediately come out bashing, Powell, the loser, too late. I mean, he bit his tongue and said nothing. So maybe, he's learned a lesson and he's going to keep quiet. And to the extent that he's going to say something to Powell, maybe he's going to do it behind the scenes where, he has a better chance of being effective. And it, kind of backfires when he does it publicly. So he's kept his mouth shut, at least, so far. Who knows? He might post something on Truth Social later on today or tomorrow, but seems like he's staying out of it. But anyway, let's get to the Fed. First of all, in the prepared remarks, one of the interesting comments, or more lie than comment, is that Powell said that inflation expectations remain well anchored, and the Fed's job is to make sure they stay that way. Now, I don't know what world Powell is living in, kind of like the Baghdad Bob world from the Gulf War, because inflation expectations left the 2% anchor a long time ago. I mean, hasn't Powell been paying attention to any of the Michigan numbers that have been coming out on inflation expectations that show, I think, 1-year expectations with a 6 handle and 5-year expectations have got at least a 4 handle? So we're nowhere near 2%. So for the Fed to claim that, it's kept inflation expectations anchored at 2%, it's just ignoring the obvious, right? The Fed has failed if that is its mission. The other thing that Powell said, and he kept reiterating this throughout the press conference, is that we're in a great shape. The economy's in great shape. He said inflation's in great shape. He said, employment's in great shape. The economy's in great shape. Everything's in great shape, right? Well, the interesting thing is, in their official statement that it's written, and they put that out, right? One of the lines they added that was not there the last time is that the Fed added that the risks to higher inflation and higher unemployment have risen. So it's not either or, it's both. So the Fed is correctly, right, it finally got something right, although it's not even a risk. As far as I'm concerned, it's a foregone conclusion. But the Fed said that the risk is that we have higher inflation and we have higher unemployment. Now, given that, how is Powell describing the economy as being in a great place? How is he saying that inflation is in a great place? How is he saying that the labor market is in a great place? Doesn't sound like a great place to me. Reaction, because gold was up $100 an ounce yesterday after being up $90 an ounce on Monday. So you had a $190 two-day move, and now we had a $70 pullback today. But the trend is clearly up, and I think what sparked the pullback was the optimism about trade talks with China. But also, not just in the foreign exchange market, over the last week, you had a two-day 9% surge in the Taiwan yuan. I mean, that is rare to see that currency move that dramatically. Now, it pulled back about 3% the third day, but still, it held on to a 6% gain very quickly. And again, this is another sign of the dollar breaking down. And the dollar has, much further to fall. But I don't have a lot of optimism for these China trade talks. And in fact, what I think the Chinese may finally be doing is the right thing. They've been resisting doing the right thing for a long time because, there's always some short-term pain. Because the biggest mistake that China made, and I've been talking about this for decades now, the biggest mistake the Chinese government made was hitching its cart to our wagon, right? They tried to service the U.S. consumer, right? Supply the U.S. consumer with goods without recognizing that the U.S. consumer was broke and really couldn't afford to pay for the goods. But China continued to really subsidize exports to the United States. They did that by artificially suppressing the value of their currency so that Americans would have more purchasing power and their own citizens would have less. And to keep our interest rates low and to enable these trade deficits, they accumulated trillions of dollars worth of mortgage-backed securities and treasuries. And by keeping their own interest rates artificially low to prop up the dollar, because higher interest rates would have sucked money into their own currency. So by artificially keeping their interest rates low to keep our economy propped up so they could keep selling us stuff that we can't afford, they caused a lot of malinvestments in their own economy, right? A lot of misallocations of resources in the Chinese economy. And doing the right thing, weaning themselves off vendor financing the United States, always had some short-term negative consequences. Of course, tremendous long-term benefits, but governments, even I guess those that aren't democratically elected, are very cognizant to, the popularity in the short run. They want to keep the people content. They don't want to, upset the apple carts. And so China's kind of, continued this. And the longer they've continued it, the worse the problem has got, because now they have more and more dollars and more treasuries, and they've caused the imbalances in their own economy to get bigger and bigger. But we finally might have given them the kick in the ass that they needed with these Trump tariffs, because now China sees what a big mistake they made in allowing their economy to become dependent on a bankrupt customer. I was watching Kudlow today on CNBC, and he was talking about how we're China's greatest customer. And there was this congressman on there saying that, the most powerful force in the world is the U.S. consumer. I mean, all of this nonsense about the U.S. consumer and how we're this great customer. We're China's worst customer. Your best customer pays. China's best customers are the ones that it has a balanced trading relationship with. The fact that it has an enormous surplus with us means that we're not paying. Again, the goal of your exports is to import. Exporting is a means to an ends. The ends is paying for your imports. That's how comparative advantage works. But they haven't been getting value for what they've been giving us. That's the point I've been making for 20 years, that China's been subsidizing the U.S. economy. That's one of the reasons we've gotten away with what we've gotten away with for so long. It's all this stuff coming in from China and some other countries. It's not just China, but China's been shouldering the lion's share of the burden.